Hello friends, welcome back to my channel Accounts for Beginners. Well, in the last video, I had given a question, and if any one of you have solved it, please send me a message so that I can check your answers, or go through this video and you will get your answers. So the question was, Balaji and Company close their accounts on 31st March every year. They purchased machineries as follows. 1. Purchase the machinery costing 1,20,000 on 1/7/2020. On 1/1/2021, some machines were purchased costing rupees 1,20,000. On 1/10/2021, again purchased machinery costing rupees 20,000. Number 4. On 1/1/2022, purchased new machinery costing rupees 60,000. Number 5. One machinery costing rupees 40,000, which was purchased on 1/7/2020, was sold for rupees 12,000 on 1/4/2022. They charged depreciation at the rate 33.33% on WDV method. They have the practice to charge depreciation for the full year, even if the machine is used for part of the year. Prepare machinery account for the year 2021, 21-22 and 22-23. Are we clear? It is clearly written what? That they have a practice to charge depreciation for the full year, even if the machine is used for a part of the year. Even if it is used for 1 month, the whole year depreciation has to be charged. This is a point to be noted. Correct? So coming to the answers. Firstly, it was stated that purchased the machine costing 1,20,000 on 1/7/2020. So we have booked on 1/7/2020. We have booked to bank account 1,20,000. Okay, and next on 1/1/2021, machines were purchased costing 1,20,000. So again on 1/1/2021, to bank account 1,20,000. On 31st/3/2021, we are to charge depreciation. So the depreciation sheet is given. You can look at it and you will understand it. Right? On that is, depreciation is to be charged on 2,40,000, 33.33%. That comes to 80,000. So the balance of the machine is 1,60,000, which is to be carried forward. So on 1/4/2021, balance brought down is 1,60,000. Again on 1/10/2021, we have purchased machines worth rupees 20,000. And on 1/1/2022, again we have purchased machines worth rupees 60,000. So total is 2,40,000. And again on 31st/3/2022, machines are to be depreciated at 33.33% on WDV. So the written down value is 2,40,000 and 80,000 is the machine depreciation value. So the balance carry forward would be 1,60,000. On 1/4/2022, balance has been brought down as 1,60,000. Now we have sold a machine purchased for rupees 40,000 on 1/7/2022 and it was sold on 1/4/2022. So by bank 12,000. Now the working of the machine is given below. You can go through it. Cost of the machine as on 1/7/2020 was 40,000. Depreciation for 2 years is given. And the sale value is also given 12,000. So we have incurred a loss of rupees 5,778 on the machine, that is to be transferred to the PL account. So what is the journal entry over here? PL account debit to machinery account. Hence in the machinery account it will come by PL account or by profit and loss account 5,778. Now the balance depreciation is 47,403. You can work it. Working is given below. And balance carry forward is 94,819. So we have prepared the machinery account as desired for the period 2021, 21-22 and 22-23. If you have any questions or doubts in this solution, please DM me so that I can resolve it. Let's take a glimpse of another question. This question, you have to read it properly. Read the question twice before you start solving this. Kalyani Industries depreciated its machine at 10% per annum on straight line basis. Clear? On 1st April 2022, the balance in the machinery account was rupees 8,50,000. Original cost was rupees 12 lakhs. On 1st July 2020, a new machine was purchased for rupees 25,000. On 31st December 2020, an old machine having written down value as 40,000 as on 1/4/2020, original cost was rupees 60,000, was sold for rupees 30,000. Show machinery account for the year ended 31st March 2021. So over here, balance as on 1st April 2020 is 8,50,000. We have purchased a machine for rupees 25,000 on 1st July 2020. So to bank 25,000, and we have sold a machinery for rupees 30,000. So by bank 30,000, and the remaining we have to go through the calculations. So by depreciation 4,500 is for the this depreciation is amount is for the value of the machines disposed. So original cost of the machine was 60,000. Whole year depreciation 6,000. So depreciation for 9 months is 6,000 into 9/12. That is 4,500. So now you have the value as 60,000. Depreciation value as 40,000. Less depreciation 4,500. And value of sale price received is rupees 30,000. Hence loss on machine is rupees 5,500, which has been booked to the profit and loss account. Now coming to the calculation of the depreciation for the year ending 2021. So let's have a look at the depreciation workings. Right? Total WDV as on 1/4/2020 is 8,50,000. Total original value of the machine original value of the total machine is 12 lakh rupees. From there we should deduct the original value of the machine sold, that is 60,000. So we have the value as 11 lakhs 40,000, and we are depreciating on a straight line basis at 10% per annum, that is 1 lakh 14,000. So 1 lakh 14,000 plus we have purchased a machine on 1/7/2020 for rupees 25,000. That works out to be around 9 months utilization, that is July, August, September, October, November, December, January, February and March. So 9 months utilization. So that is 25,000, 10% is 2,500 into 9 by 12, that is 1875. So the total depreciation to be charged is 1,14,000 plus 1875. So the total is 1,15,875. Are we clear? If you have any doubts or questions, please message me so that I can prepare a specific video to clear your doubts. And if you haven't subscribed to my channel, please do subscribe so that every week you could get a video update and you could clarify your doubts more perfectly. Now coming to this question. This is a very tricky question. Please read the question very carefully. On 1st January 2020, machine was purchased by X for rupees 50,000. On 1st July 2021, additions were made to the extent of rupees 10,000. On 1st April 2022, further additions were made to the extent of rupees 6,400. On 30th June 2023, machinery original value of which was 8,000 on 1st Jan 2020 was sold for rupees 6,000. Depreciation is charged at 10% per annum on original cost. What do you mean by this? 10% per annum on original cost. Show machinery account for the year 2020, 2021, 2022 and 2023. The books of X. X closes his books on 31st December every year. Correct? So the tricky point is depreciation is charged at 10% per annum on original cost. It means depreciation will be charged on straight line method, because on the straight line method 10% of any value that is to be charged every year is a straight line method. So depreciation here will be charged on straight line method. Now come to the solutions. Let's do the working first before we come to the solutions, right? So on 1st January 2020, machines were purchased by Mr. X for 50,000, correct? So 2020 he purchased machines worth rupees 50,000 and the whole year depreciation is 5,000. Clear? Additions were made to the extent of 10,000 on 1st April 2022. That is the next year. So in 2020 you just have 5,000 as depreciation. In 2021 this 50,000 ka depreciation 5,000 and additions depreciation, additional machine was added for rupees 10,000 and it was used for 6 months. Because the machine was added on 1st July 2021. So for 6 months 10,000 का 10% is 1,000 and 6 months means 6 divided by 12. So it is 500 rupees. So in 2021 you will be charging a depreciation of 5,500. Coming to 2022. 2022, on 1st April 2022, further additions were made to the extent of 6,400. Okay, so in 2022 we have made an addition of 6,400. So coming in 2022 we will have this depreciation for 50,000 rupees, 5,000, 10,000 rupees we have purchased, so that is 1,000, and 6,400 used for how many months? 9 months. Sorry, it should not be 9 months. $6,400. 1 second, please. So 6,400 should be for the whole year, and 9 months has been calculated, which is wrong. It should be 9 months, correct, because on 1st April 2022 we had purchased, sorry. So 2022 April, so April, May, June, July, it's 9 months. So 640 divided by 12 into 9, it's 480 rupees, correct. So, and in 2023, now we have sold machines worth rupees, original cost on was 8,000, and which was sold on January 2020 for rupees 6,000. So let's calculate the WDV of that machine and move forward. Firstly, in the 50,000 rupees, that 8,000 should be minus, so 42,000, and that 10% is 4,200. 10,000, 1,000, and 6,400 is 640. So the total depreciation to be charged is 5,840. Now coming to the profit or loss on the machine sold. Machine's original value was 8,000 and was sold on 2023. So 2020, 21, 22, 2020, 2021 and 21, 22. 3 years depreciation is 800 into 3, that is 2,400. 8,000 minus 2,400 is 5,600. So WDV as on 1/1/2023 is 5,600, and depreciation for 6 months, because it is sold on 30th June. We have utilized the machine for 6 months. So 6 months depreciation comes to around 400 rupees. 800 into 10% is 800. 8,000 into 10% is 800 divided by 2 for you 6 months. So hence 400 rupees. So 5,600 minus 400 is equal to 5,200. But we have sold the machine for rupees 6,000. Hence we have gained rupees 800 on the sale of this particular machine, right? Now I think so the whole thing is clear. Please go through the machinery account. I hope this is legible. Please go through the machinery account. If you have any doubts, if you have any questions, please message me so that I could prepare a video for you to clarify your doubts. Now moving to the next question. Please copy this question or take a screenshot of the same, and if possible do the workings yourself. You have some workings visible, but try to solve this question yourself. Your concepts will be very much clear regarding depreciation and disposal of the machines or disposal of assets. A company limited provides depreciation. X company limited provides depreciation on plant and machinery at 20% per annum on reducing balances. That is, it provides 20% depreciation per year on its WDV. Clear? On 1st April 2022, the balance of the plant and machinery account was rupees 10 lakhs. It was discovered in 2020-21 that point number 1, rupees 50,000 being repair to machinery incurred on 30th June 2018 had been capitalized. What do you mean by this? A repair expenses by mistakenly has been included or capitalized with the machinery account. Point number 2, rupees 1 lakh being the cost of a generator purchased on 1st October 2017 has been written off to maintenance account. Another mistake, in 2017 what we have done, a generator was purchased for 1 lakh and that has been by mistakenly written off through the PL account and instead of being capitalized. Okay? The company director wants to rectify the mistakes while finalizing the accounts for the year ended 31st March 2021. A plant that cost rupees 80,000 on September 2019 was scrapped and replaced with a more sophisticated one on 31st December 2020 by spending rupees 1,20,000. Scrap realized rupees 20,000. Prepare the plant and machinery account as it would appear on 31st March 2021 after providing depreciation for the year. If you are really interested, try to solve this problem yourself. You will get a very good idea and clarity regarding depreciation and some adjustments of accounts. Okay? Please try to solve this problem yourself. I will give the solution in my next video. Till then, goodbye. Take care. And if you haven't subscribed, please subscribe and like my channel. Bye.